What's up guys, and welcome back to the channel for my first video of 2023, and what a video this is. Today I'm looking at Mullen Automotive and doing an MULN stock analysis. This video might be one of the most important Mullen stock videos that you are going to see this month. So today I will be looking at the Form 10K and explain the massive importance of this annual report. I will break down the most important facts to show you exactly why the stock is going to see massive movement this coming week. And I will touch on what is going to happen on the 19th of January and the effect that this will have on Mullen stock price. And I will explain why Mullen is hiring staff and signing all the deals that they have signed over the past few months. This is extremely important to understand, and you need to know this now before it's too late. And I will give you my opinion on the valuation of Mullen stock and my MULN stock price prediction. So if you enjoy my videos and want me to keep creating regular updates, then can I ask you to smash the like button. I have been making Mullen videos for nearly a year, and everything that I said would happen has happened, so subscribe to the channel if you're new. I'm aiming to get 500 likes again on this video. Help me achieve this goal, and turn on notifications to make sure you don't miss out on any new content like this. Now let's get into it. So on Friday, Mullen Automotive released the Form 10K annual report. Now this came very late in the day, so this 10K was due to be filed back in December, but Mullen Automotive filed a document allowing them an extension up until the 13th of January. The company just about got their filing in on time in order to not be penalised going forward. Now I fully expected this to be filed on time because the consequences had this not been filed on time would have been detrimental to everything that David Michery is trying to achieve. And what I mean by that is not exactly what most of you will be thinking right now. For Mullen, filing this form late would have been a disaster, even more of a disaster than the actual 10K is, and I will talk about this more in a moment. But first, a little understanding of why Mullen could not afford for this to be filed late. So this article popped up on Investors Place on Friday, stating that Mullen has until 5:30 PM to file the form, and the shares of Mullen stock closed lower by 8%. Now this was edited later in the day because Mullen filed its Form 10K after the market closed but before 5:30. And the fact that the stock proceeded to drop a further 16% in after hours should tell you nearly everything you need to know about the general idea of what is in the 10K. But there is a few massive points that nobody else is talking about. First of all, it was vital that the 10K was filed on time because firstly, Mullen would lose Rule 144 eligibility. The company would also lose the power to file a Form S3 and a Form S8. According to 100F Street, Mullen will regain Rule 144 eligibility and the power to file these forms once the 10K was received. So a Form S3 is used in certain types of offerings, such as through capital raisings, through secondary offering, or the exercise of outstanding warrants. And as we will see in a moment, warrants play a big part in Mullen's annual report. But losing the power to file a Form S3 could spell particular trouble for Mullen. At the company's upcoming special meeting of shareholders on January 19th, it is proposed several provisions relating to raising capital. Proposal number 2 seeks to increase authorised shares from 5 billion to 1.75 billion, while proposal number 4 seeks to issue $150 million in notes and up to $190 million of additional Series D preferred stock. Now before I go into the financials, just take a moment to realise just how much dilution that would actually involve. Going from 1.7 billion up to 5 billion shares is basically a 200% dilution. If this was all done in one go, and let's say, for example, you owned 30% of the company, before this, you would now only own 10%, so that is massive. But that is not at all surprising. After all, Mullen started 2022 with only 28 million shares, and by September they had 1.7 billion, which is about 6,000% dilution in less than 9 months. Again, to put this in clear terms, if you owned, say, 30% of Mullen stock at the beginning of 2022 and you didn't buy or sell any stock, you would now own less than half of 1% of the overall company stock right now. Now this level of dilution is incredible, but everyone keeps saying that this is a growing EV company and dilution is needed to bring money in and grow the company further. So let's look now at the Form 10K and see exactly what Mullen have done with all this raised capital. So first, let's start with the balance sheet, but I will look at this in more depth in a moment. As we can see here, the company now has total assets of 302 million and total liabilities of 145 million, which gives total stockholder equity of $156 million. Now the very first thing that I want to point out here is that the net asset valuation of $156 million is still multiple times below the current market cap of $594 million. So even after MULLEN stock plummeting on Friday, this stock is still grossly overvalued. But this is just the beginning. We can see here that the company's two largest assets are intangibles and goodwill. Now this is something that you never want to see. This is an EV company supposedly. Their factories, their inventory, cash and investments should be the biggest assets, not goodwill and intangibles. So let's start with the goodwill. Goodwill is effectively the price that is paid above the value of what you have bought. So if you paid 300 million to acquire something worth, say, 200 million, you record the asset at 200 million and put the other 100 million to goodwill. So in effect, goodwill is where you pay more than something is actually worth. Now sometimes this makes a lot of sense. Think about a company buying out a competitor company. They might pay above the odds, but then they are controlling a bigger market share. As I said, sometimes it makes sense. But generally, goodwill is not good. And generally, this will get written down or even completely written off, so I tend to discount goodwill from any valuation calculations. So seeing this as the company's biggest asset is a massive red flag. By the way, if you are a member of my Discord group, I have talked about this over the past few months. I have fully expected this to be the case after the Bollinger deal was done because it's ridiculous valuation. So if you are not a member of the Discord, check this out. There is a link in the description below. So MULLEN paid 148 million for 60% of Bollinger Motors. And what they have got is 60% of the following. There is no real assets here. This mainly consists of things that are very hard to put a real value on, such as IP and patents. By the way, none of this was present on Bollinger Motors financials that MULLEN filed back in November, so this is extremely interesting. It seems as though Bollinger Motors has gone from a value of $643,000 up to a valuation of $246 million in the space of a few months without doing anything other than making losses. So you can make your own mind up on this acquisition. In my opinion, this valuation is an absolute joke. But before I look at the income statement for the year, which is quite frankly pathetic, let's look at the other major assets, which is intangibles. Now this is MULLEN's single biggest asset, $93 million, which is IP and patents acquired from Bollinger Motors. So that is more than 180 million of MULLEN's assets made up of goodwill and intangibles. The company has stockholder equity of 156 million, as I said a moment ago. Now I tend to remove goodwill from calculations when I am valuing any company, and in this case it would be wise to also take the intangibles with a pinch of salt. This is a company with a market cap of over $500 million. I wouldn't value this company at even a small fraction of this. In my opinion, it's not worth it. I expect this to crash so much over the next few months. So let's look at the income statement. Now the first thing that stands out here is the 780 million net loss for the year. This is quite simply insane, but a lot of this loss does not affect the company's cash flow. This is one of the rare times that I'm going to say something remotely positive about MULLEN. The majority of this loss is not detrimental to the company's operations. However, that does not mean that these warrants are not detrimental to the stock value and to shareholders' interests. But the company has made a real loss far in excess of 130 million for the year when we remove these warrant liabilities. This is absolutely huge. I wouldn't touch this stock. This is a disaster waiting to happen. Which is funny because the stock is down like 97% since going public. But in my opinion, this could very easily drop another 80 or 90% in 2023. As I said earlier, they are planning to dilute from 1.7 billion shares up to 5 billion shares. But look at what they have actually got for the 1.7 billion of dilution that has already taken place. For most of 2022, MULLEN stock was trading far above $1 and only dropped below 40 cents late in the year. So even if all of the dilution came at, let's say, 40 cents a share, that would fund the company with about $680 million. And oh my god, this is a low figure. This is a low estimate that I'm giving here. This should be, and in reality probably is, far higher than this. But where has that money gone? They have 300 million of assets, and nearly 200 million of that is goodwill and intangibles. This is an absolute joke. Look at these figures. Paid in capital of $947 million with accumulated deficit of 889. Pretty much everything that has flowed into this company from retail investors has already flowed back out. I have been warning of this for nearly a year. By looking at the history of management and its main investors in the stock, you get an idea of showing exactly what was likely to happen, and it is going exactly like it did for all of David Michery's previous companies. Which leads me on to something very funny in these financial statements. Just in case you have read this 10K and might be thinking that maybe David is running this company into the ground, and maybe someone else would be better suited to run Mullen, look here on page 36. We are highly dependent on the services of David Michery, our founder and CEO. Mr. Michery is the source of many, if not most, of the ideas and execution driving us. If Mr. Michery were to discontinue his services due to death, disability, or any other reason, we would be significantly disadvantaged. Wow. Just wow. I don't think I've ever seen a statement like this in any financial statements. I don't think I've ever seen Tesla say anything like this about Elon Musk, or Microsoft about Bill Gates. Even Steve Jobs got ousted from Apple at one stage, so I find this incredibly funny. After all, for his role in driving the stock into the ground, David Michery has had a nice pay rise from 2.3 million up to 6.3 million for 2022, which is mainly in shares, and as it says here, no other compensation. $6.3 million in total for the year. Except wait, this is not all that David Michery has received in 2022. Despite all of the compensation here, showing a zero, all of these deals that Mullen have signed have also earned the CEO more shares, as we can see here, deliver a pilot vehicle, join the Russell 2000 and 3000 indexes, and the other milestone. Every deal that Mullen has signed has given the CEO an extra 1 or 2% of the entire company. And as the company's share count goes up, he gets more shares. Which, as you can see here, adds up to 107 million shares or $30 million. So David's real compensation for 2022 is actually about $36 million for the year. Now, it is usually a good thing for a CEO to get shares for a bonus. It aligns the interest of management with that interest of shareholders. But David has been selling his shares all year long, pretty much the maximum that he is allowed to sell under the SEC rules. Now, there is plenty more that I could talk about in this video from this 10K alone and from Mullen's other filings, but this video would go on for hours. However, with this week being a big week for shareholders considering a huge day later in the week, what do you expect is going to happen? Drop a comment and let me know what you think. Let me know if you are buying this stock, if you are holding this stock, or if you are selling this stock. And if you're new here, consider subscribing to the channel, smash the like button, and I'll catch you in the next one.